This is the K-State Radio Network and Agriculture Today. Good to have you along with us on this Friday. To the grain market scene we go now, and more gyrations in these trades this past week. That is the norm anymore. Along with us again is Dan O'Brien, grain market economist, K-State Research and Extension, joining us from his office in Colby, Northwest Kansas. And Dan, we're going to talk at some length here about that upcoming prospective plantings report out of the USDA. That's out next week. It's highly anticipated. But before we get specifically to that, we'd have to say that as you look at the markets and you say, especially the carry in the markets, the near-term demand is still very much there.
Yes, if you look towards the markets as I guess a harbinger or a signaler of whether traders or the market overall in its consensus is encouraging people to bring grain to market now or to store it. Certainly for all of this year for corn and all of this year and on into next for soybeans, we have no carry in the market. We have strong lead contracts. For instance, on yesterday's close, May corn closed at 546, July at 532, September 482, and December at 465. So again, none of the type of pattern you'd see if the market were telling us to store grain from now here in early March on into June, July, and then we'll figure it out. No, it wants it now. So you got that, and then for soybean futures, May contract $14.14, still tremendous price, and July 1404, August 1358, September 1264, the November 1214. So again, no carry whatsoever in those markets, and there are a number of supply demand factors that are affecting that. Again, interplay with South American crop problems, and then the finality of the soybean crop down there coming now to making its way out of the fields to the ports, and the worries about the second crop planting of corn in Brazil, which is their export crop, and as I understand, it's about 70%, 70-80% of the total corn they produce is coming in that second crop. Well, it's been late planted, but to some degree, so there's that to think on. Wheat doesn't have the same set of issues, although wheat's had kind of this mixed bag of things coming at it of late. Of course, got some moisture, which is good for production prospects, or at least brings hope out here in the western part of the state. Yeah, but you closed yesterday with the May contract, May 2021, 566 and 3/4 in July, up to 573, September 579, and D's at 588. So you do have carry in that. What's always kind of interesting now in the wheat market is, we have carry that carries right through the next harvest. So from those price levels, probably the first place to go is to look and see, well, what, again, in anticipation of that prospective plantings report, what are the futures markets saying in terms of the comparison of new crop December corn and new crop November soybeans, i.e. the classic soybean corn price ratio? Well, new crop bids, again, you got 1214 3/4 as of yesterday's close for November soybeans, 1465.5 for D's corn. So it's 2.58 or 258. And that would be advantage soybeans generally. Again, 2.4, 2.5 is kind of thought to be the break even mode. So advantage soybeans now in that report. And I think the general idea following first what the USDA said, which was about 1.5% more corn, about 7% more soybeans, and then followed up by other reports which say closer to 3 to 4% corn and 4, 5, 6% soybeans. So that the same things that you and I were wondering about before that we'd heard prior to that are kind of being reflected, same types of trends being reflected somewhat in these post USDA Outlook Conference surveys. So we shall see, and if we have good planting weather, that corn number will probably grow. And if we don't, the soybean number will probably grow. It's just a matter of what on the margin gets going in.
We
Uh,
will have clarity on that next week.
yeah. And I'd like to mention also, if we have some time, some of the price relationships we're seeing out in the country. That'll have something to do, I think, with um, with the stocks report results. Although uh, part of the story on the stocks reports probably won't be fully reflected in what's meant to be the March 1st number. Here's what I'm talking about. When you look at corn, excuse me, well, the wheat corn price ratio and in different parts of the state. You and I have talked about this before, just on a per bushel basis with 56-pound bushels for corn and 60-pound bushels for wheat. Well, out in Colby and Garden City, in western part of the state, you've got corn prices greater than wheat prices, and so in Colby 555 corn, that's a cash price. 537 wheat. 537 wheat's no slouch of a price. Great price, but still it's less than corn. So 97%. You go out to Garden City, even more pronounced, and even more pronounced manner. You see 581 corn price and a 544 wheat price, so 94%. And for the rest of the state, everything else is lined up to be 101 to 103 percent of wheat over corn. But if you're from a feedlot owner's situation, if they're having difficulty finding corn supplies for what's left that's not accounted for, you probably come back, you can translate that to a per pound basis. So you divide those cash prices, again, the wheat price by 60 pounds, the corn price by 56, and then see where you stand. And when you do that, then all across the state, the price of wheat on a per pound basis compared to the price of corn on a per pound basis is less. And of course, most pronounced out, again, places we just talked about, with the wheat price on a per pound basis being 87% of what the corn price is in Garden City, 90% in Colby. And then if you look at selected locations in Salina, Hutchinson, Topeka, Columbus, ranging, well, basically they're all in 94, 95, 96%. So
this really gives credence then to what you've been saying. There is wheat feeding going on at an appreciable level out in Kansas for sure.
And some of that, a good chunk of that will be reflected in the March 1st number. Well, there's been a lot that happened since March 1st. So if anything, the March 1st number is probably going to underrepresent how much wheat feeding has actually happened. So then we go back to this, that the supply demand balance sheet that the USDA projected in February, excuse me, in March, on their March 9th in their WASDE report. Well, there's another one coming up in April. And so it very, very well could be that the number that comes out for wheat feeding in the central and southern plains on March 1st may be expanded upon by the USDA when they come into the April report. When the USDA cut back U.S. hard red winter wheat exports by 25 million bushels in March, and that we, rather than say that, gosh, the sky is falling, a lot of us that live out in this area thought that, well, if it's going into feed usage, that may explain why there's not as much going out into the export channels, because it's being used domestically. So that'll be really an interesting number to look at. And either way, I think that you'll aggregate all this together, and I would wonder about the U.S. wheat ending stocks number being tightened up some. But by the time we actually get to that April WASDE report, that we'll see something below the 836 million bushels that had been projected. And again, decent exports in a lot of classes, pretty strong wheat feed usage also in our neck of the woods. That'll help contribute to that.
Dan, you say you're finding something curious in grain sorghum basis here in Kansas. Explain, if you would.
Well, we've seen grain sorghum basis in some of the major terminals in Kansas weaken here of late, and but yet the basis at country elevators tending to hold up pretty strong. To me, given the location of those terminals and patterns you've seen in the past, where when we're filling trains and such, we have strong basis bids, and when we're full, we slow down. So I guess can kind of combine that with looking at what the USDA's grain sorghum export reports are showing in terms of their weekly export reports that come out, and you've got grain export shipments at 138.5 million bushels, which is about 47% of the USDA's projection of 295 million bushels. And we're about 56% of the way through the market here. So that's shipments are trailing. Purchases, on the other hand, 84% about of that USDA number of 295 million bushels. And we're 56% of the way through. So strong forward purchases trailing shipments. Now, the numbers that matter are ones that we don't have in front of us. How much grain sitting in ships waiting to go, and had to get soybeans out of the way first. Something that could very well be the case. But in my thinking, this you can't continue to have that disparity in the grain sorghum market for the long term. Eventually, that grain sorghum, those shipments, those forward purchases, almost all of them, I mean, other than just a few bushels or metric tons, as the rest of the world sees them, they're all going to China. So there'll be some times of some barn burner movement coming in the grain sorghum market if these forward purchases hold up, and if they don't, if China reneges or something like that would happen, then what would occur? Well, then the cash price of grain sorghum probably comes to the place where it would be considered to meet short-term feed demands while the corn is all in tight hands, et cetera. And I'm not saying that will happen, but the shipments have to start happening, or you wonder about that. And when you see in some of our major terminal markets, some weakening in grain sorghum basis, not all across the state, but in a few key areas, then it just bears watching as to what that might portend to in the grain sorghum market in the future.
Well, no lack for talking points in these markets anymore, that's for certain. And we're looking forward to your thoughts coming out of that prospective plantings report due out midweek next week when we hear from you next Friday, Dan. Until then, thanks as always.
Thanks, Eric. Take care.
Dan O'Brien, grain market economist, K-State Research and Extension. He has much more to say about these markets in his weekly notes on the grain trades. You can find those now at agmanager.info, agmanager.info. And Agriculture Today will return in a moment on the K-State Radio Network.